Traders, hello. This is Rev-Up by SageFT from the live trading desk. I am the founder and head coach. You're watching another episode of the Review and Rev-Up. Let's get right into it. Okay, let's review. First, let's take a look at the news that happened, or the lack of news that we had last week. Then we'll take a look at the news next week shortly. This was probably the least amount of news release that I have seen in a very, very long time. We didn't have any news that was of any significance or importance until Thursday morning, jobless claims retail sales at 8:30 a.m. And then Friday, we had housing starts and permits. That was it. Other than that, just a bunch of Fed speakers. So what we were able to do is we were able to take the training wheels off and see how the market rode without any major catalysts. So here's how it looks on the daily chart, but let's go back. So Friday, Thursday, Wednesday, Tuesday, Monday. Let's take a look at where we are at here. First thing I want to point out, we have a very, very nice long that is firing. And what we're looking for is 5963.75 on the upside. Now, this is just on the daily chart, but I want to take a look in the lower time frames. Let's go back to where we were here. And let's take a look at it, because the things that I drew on the daily chart should show through as drawings on the 4 hour. All right, so what we were looking for was we got the breakout of the flag. So did we, or were we going to come back and test any of these high to high, which would become support levels, or were we going to come back to any of the low to low trend lines? So if we look here, the narrative was, were we going to go down or up or flat? Let's go to the current time and let's take a look at how this ended. All right, so as you can see, we just started to lift and we just continue to lift. They took everything that they could to get a plausible sell trigger below the open of this bar right here, which would have been Friday, Thursday, Wednesday, Tuesday, Monday, which would have been the Monday open of 54.50. Let's go to the 4 hour chart and let's take a look at what that looks like as it is current. Okay. So here is where this all lifted off out of the flag. We continued to push. This would be Monday, all-time highs here up into the 18, I believe 1850 was the high. Make sure. Yep. And so Tuesday, we started to get a removal of the removal, right? So this is removing liquidity to the buy side. This would be removing the removal of the buy side liquidity, which is what you see here. Now, what happened was we came right into this order block / breaker block, depending on how it played out moving forward, and we couldn't close a single tick below it. So look at this box here. Notice we couldn't close below. So what it actually did was trapped all the losing players. This was the best signal of the week right here. This removal of the removal supporting this block structure. Removed it all the way back up through here, through the sevens. Now I want to point out we had a target here of 09. Nailed it. Rallied into, 27.25 is the all-time high. Rallied, came off of it, and kind of fell back into, again, this same pattern. Boom, boom. So we drew it. Boom, here it is. Okay. This is the left hand shoulder neckline of a wonky head and shoulders. Notice, again, it could not close through it, and they decided to take it up again. That was on the 4 hour chart. Let's go ahead and take a look at the 15-minute chart. Let's look at all the fantasticness of it. All right, what we have here is we have the Taiwan Semiconductor came out with stellar earnings after ASML came out with terrible earnings, knocking us lower. Look at immediately right back into first position, right back into the onslaught or squeeze of the shorts or the sellers that were out of line on the 15-minute chart. And so we get to that new all-time high and we fade back. But remember, we fade back into the perfect levels for them to start taking it up again, right? So let's draw the removal of the exhaustion bar. Here it goes. I'm going to draw it for you. The first thing that we have to find, Boom. Identify a plausible exhaustion bar. Number 2, draw on liquidity. As you find the draw on liquidity level, we put our box around it. We go a 1-to-1 risk reward ratio from it. And so we have a high of the box of 58.90 spot 75. 1-to-1 risk reward ratio would be 59.02. And so then we quickly get those targets throughout the week as we come into the end of the week. And the other levels that we were watching obviously were the 59.09 level, and we hit that as well. So let's go ahead and dive in to what can we expect next week. All right, what we're going to do is we're going to take a look at next week's news to see if there's anything that's going to catch our eye. What we want to look for is we want to look for the red folders here. The only thing I see is Flash Manufacturing PMI and Flash Services PMI on Thursday. That is the only thing that I see, but here that has red besides the unemployment claims on Thursday. The only other thing that I see here is existing home sales, and we have a bunch of Fed speak as the IMF begins its meeting. Okay, other than that, we have durable goods orders, and that's basically it. So do we have another week of just free-floating markets? Do they slowly drift upwards? Now I want to go back to the premise of our bullish thesis. The thesis is the fact that this is what our grocery bill looks like. If you were to buy the same basket of goods 12 months ago, 14 months ago, 16 months ago, 18 months ago, are they cheaper or more expensive at the grocery store? Well, the answer is more expensive. Well, why would the stock market go up? If everything's more expensive, people would buy less of it, right? That has nothing to do with it. Stocks are bought in dollar terms. If you have $1 worth of purchasing power 12 months ago, and now that dollar only buys you 70 cents worth of stuff, the stocks are more expensive to purchase. It doesn't mean they have a greater value. So therefore, the thesis is it's going to continue just pushing up and up and up and up, even though we're not actually making any more money because the inflation is eating it at the same time. So again, I'm going to post the same exact thoughts this week as we carry on, this being Sunday night. What I want to do is I want to take a look at the KISS chart first. Here is your 200 simple, 20 simple, 8 EMA, and then price would be your 1 SMA if we were looking at the actual KISS chart. Up, 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 and up. So therefore, the same thought goes into it. Do we come down and start testing any of these levels below us, which are these white lines? We have a very, very large level here that could play out, which stands out to me the most, which is roughly 5,700, 5,670, depending on how much time it takes to get down here. Now, does it do lower or does it move higher? Let's go ahead and take a look at the 4 hours, see if we see anything different. Well, no, I don't. I don't see anything different. Do we come back down and test this level? Do we come down and test these levels right here, which we did not get a chance to do? Or do we just come straight into these levels that you saw drawn on the daily chart? I really don't have that answer, but here's what I know. We'll be ready for it. All right, that's going to do it. I hope your football team has won or is winning, depending on when you watch this video. Go Packers, as you know, American football. Hope everybody has a wonderful, wonderful rest of your Sunday evening. And I hope to see everyone Monday morning, tomorrow morning, in the live trading desk, 8 a.m. to noon on YouTube. The name of the channel is the Live Trading Desk SageFT. Go ahead and click the links down below to get set up with either a coaching call or the game plan, which explains my 100 level trading. I want to mention here, starting soon, Apex is going to have new rules that are going to benefit all of us in our trading. We'll have those links in the description down below. We'll see everybody tomorrow morning, 8 a.m. Eastern. Thank you.